Welcome to The Explainer. Today, we're diving into the absolutely wild story behind SanDisk. It's one of the hottest stocks in tech right now, and, maybe one of the most controversial too.
Okay, just look at this number. We're talking an over 800% surge in less than a year. I mean, a move like that doesn't just get people talking. It has everyone, from Wall Street pros to retail investors, just scratching their heads and asking, what in the world is happening? And get this, the plot thickens. Just recently, the stock jumped another 22% in a single day. And the kicker? There was no news. No big announcement, no press release, nothing. So you really have to wonder, what's really driving all this hype? Right, so let's get into it. To really wrap our heads around the whole debate here, we've got to first look at just how insane this rise has been. It's been a real rocket ship. So check out this timeline. It's pretty incredible. Not that long ago, SanDisk was spun off from Western Digital for just $36 a share. Fast forward to today, less than a year later, and it's trading at over $334. That's not just growth, that's an explosion. It's now one of the top dogs in the S&P 500. So what's the number one reason everyone's pointing to for this incredible run? Well, it all comes down to the biggest thing happening in tech, and maybe the world right now: AI. A lot of experts are saying we're in something called an AI super cycle. And what that basically means is that the demand for computing power, thanks to AI, is just so huge and so relentless that it's completely changing the game. The old boom and bust cycle that the memory chip market was famous for, yeah, AI might be breaking that for good. And here's the bottom line. AI has a voracious appetite for data. I mean, it's just unbelievably hungry. To train and run these complex models, you need massive, massive amounts of data, and you need it fast. This is kicking off a literal trillion-dollar spending spree on AI infrastructure. And what's at the very heart of that infrastructure? You guessed it, high-performance storage, specifically the enterprise SSDs that SanDisk makes. Demand is so off the charts that suppliers are already jacking up prices. Okay, so we've got the motive, right? This massive AI gold rush. But now, let's pop the hood on SanDisk itself and see if the company's financials actually back up this unbelievable story. And right away, things look pretty solid. They're making good money, they're profitable. But what really jumps out at me is that last number, the debt-to-equity ratio. It's super low. And why does that matter? Well, it means SanDisk isn't drowning in debt. It has the cash and the flexibility to pour fuel on the fire and really go after this massive AI opportunity. And you can see exactly how they're doing it. Their strategy is just laser-focused. 1, they're not trying to be everything to everyone. They're targeting enterprise SSDs, which have basically become a core building block for AI. 2, they're pushing their next-gen tech, BiCS8, which means more storage and less power. And 3, and this is huge, they're already in deep with 5 of the biggest hyperscale customers on the planet. We're talking the giants of the cloud world, getting their new Stargate platform into those massive data centers. So the company's story seems to check out, right? The strategy is smart, it's perfectly timed for the AI boom. But this is where things get a little tricky, because when you talk to market analysts, some of them are starting to get nervous, not about the company itself, but about its stock price. And that's really the million-dollar question, or maybe billion-dollar question right now. Has all this excitement and optimism about AI pushed SanDisk's stock to a place where it's just too expensive? Has the hype train left the station and gotten way ahead of the actual business? This chart really spells it out. We're looking at the price-to-earnings ratio, or PE. It's a fancy way of asking, how much are investors willing to pay for $1 of the company's profit? And look at this. Investors are paying over 21 times SanDisk's expected earnings. Now look at its main competitors. They're all trading for less than 10 times earnings. So you're paying more than double the price for SanDisk's growth compared to anyone else in the space. That's a huge premium. And that premium basically splits everyone into 2 camps. On one side, you have the bulls. They say, yeah, it's expensive, but SanDisk is a game changer. It's at the heart of the AI revolution, and it's worth every penny. But on the other side, you have the more cautious folks. They're saying, look, it's a fantastic company, no doubt, but that price is just scary high. They think all the good news is already priced in, leaving zero room for even the slightest hiccup. Okay, so let's bring it all home. We've got this incredible AI super cycle on one hand, and what could be a super bubble on the other. How do we make sense of it all? This quote from a trader named Tim Bowen really hits the nail on the head. He says trading is more about managing risk than anything else. And for a stock like SanDisk that has gone almost straight up, the question really changes, doesn't it? It stops being, wow, how much higher can this go? And starts becoming, okay, how much risk am I really taking on at this level?
Which leaves us with the big, fascinating question at the end of all this. Is what we're seeing with SanDisk the dawn of a new era in tech, where AI just changes all the rules? Or is this a classic story we've seen before, a cautionary tale of market hype and mania? Honestly, the answer to that question is going to tell us a lot, not just about SanDisk, but about where the entire tech market is headed next.
Hit the subscribe button to get up to date.